Good morning. How's everybody? My name is Anthony Hsieh. Pleasure to be here with all of you this morning. We are certainly in fascinating, interesting, and scary times. Tomorrow's not yet here today, and today is a little bit scary and a little bit shaky. But man, is the prize going forward just tremendous. I'm going to talk to you a bit about that today. Take a look at this ad. There's a little bit of everything on there. I thought it's a good example for us to set the mood this morning. I actually started in the mortgage business 6 years before this ad. I took my first loan application in 1986 with a typewriter. It's hard to believe that I'm standing here in front of you talking about digital mortgage this morning, and it's still my generation. If we can just think ahead 10 years, 15 years, this is where all the excitement is building in our industry and other industries that are coming in to our sandbox. One of the things that's really common at Loan Depot is we understand that we must do some of the hard work. Business models will become more complex. Why? Because customers demand it. It is just too confusing. 95% of all of the products that you see on this page has been replaced by a smartphone. It's not where you start, it's where you finish. Today, through the lens of the consumer, they see a lot of stuff, such as this. It is the most complex, the most stressful transaction a human being goes through in its lifetime. And I think it's really important for our industry to understand, despite the business pressures and higher interest rates and some of the price competition, we have to focus in on the prize, and that is we got to figure out how to delight that customer. This is the tease. At least it is for us. 96%, 97%, and 97% customers are telling us very clearly they need help. They lack the confidence to choose the best vendor. They feel frustrated, and they would love to have a group of trusted vendors they can select from. And I think what's really interesting here is the fact that 4 out of 5 are asking a lender to recommend a trusted realtor. How can that be? Indeed, very interesting times that we're in. What customers want is they want a simplified experience and prefer less brands to get them through that transaction. They actually would prefer one brand. But today it does not exist. Many companies will be chasing to answer that question to delight the customer. Very few will succeed. Lots of capital will be burned trying to satisfy that outcome. What and how? On the left is sort of a mock-up of what's happening today. Not exactly, but you get the point. It has been that way for decades, right? Realtor drives the transaction. They create the intimate relationship. Lots of driving around, showing homes, having discussions. And then when it's appropriate, that hub, or the locomotive that pulls the real estate transactional train, starts getting others involved. And certainly as a lender, and being a lender for over 30 years, we understand that's the number one source of business for us. To the right is sort of the modern approach. And that is, with the power of the smartphone and technology advancements, AI, all of the things that are about to come our way, customers in control. And they will become more powerful as we move forward. And that will continue to disrupt not only our industry, but the way we do business. I love this page because it now starts to talk about who. If you look at some of the notes that I put on the left, again, it's not where you start, but where you finish. And look at the bottom right there. I also think it's just a matter of time, not a matter of if, it's more a matter of when. Everyone's going after the same core customer. You have big brands, big companies making bets to add products and services. And the two main components, real estate services and lending. You have both parties looking at each other. We're friends. When will that turn into foe? If you look on the right, that's more of a traditional thought process of a lender. We wait until somebody tags us in. In a traditional mortgage model, the institution or the company relies on field loan officers that carry the franchise value and has the relationships with realtors. And over the course of the last 4 decades, mortgage companies kill each other by recruiting each other's loan officers. And it's still the case today. Well, there's some new players in town. They are way up funnel from us meaning lenders. You got contemporary digital brands that are now serving the customer, and many of them becoming very powerful. By the way, Green Sky just IPO'd. They have a market cap north of $3 billion. Home Advisor, last time I checked, has a market value north of $10 billion. Lots of power there, lots of brains, lots of intellect, understands digital. There's no doubt. They're going to widen their products and services. Here we go. Here are some of the big names. Redfin has a mortgage company. Keller Williams has a mortgage company, and I'm sure everybody's seen the news 3 weeks ago. Zillow now is about to have a mortgage company. OfferPad has a mortgage partnership with, actually, us, Loan Depot. And we all know about Realtor.com and Opendoor. Again, they're widening their products and services. They're getting more complex. You have to get more complex because that's what the customers want. This chart is more at the heart of this conference, and that is a digital mortgage. But I wanted to speak to all of you today to give you a glimpse into sort of how we view our positioning and our strategy going forward. It has to be more than a digital mortgage. The digital mortgage creates efficiency, a better experience, and it's really needed in our industry to drive down labor cost. I'm sure most of you know that labor costs on a per funded loan basis in our industry increased in the last decade post Dodd-Frank. We as an industry have to figure out how to push that back down. This chart is extraordinarily powerful. I call it a crosshair, the horizontal line, the vertical line. The horizontal line is a different type of complexity than the vertical line, different challenges. Almost requires two different management teams or two different companies. And this is the challenge of disruption. Take a look at all the products and services up above. And the reason why it's there is simple. That's what the customers are telling us they want. In a perfect world, that's what they want. No one's providing that as of yet. How many companies will do that going forward? 5 years, 10, maybe 15. I bet I'm going to see it in my lifetime. From the other companies that are coming in to mortgages, welcome to the jungle. Lots of stuff we do as a mortgage company. However, the complexities and the confusion of our industry blocking and tackling is going to get easier because of the digital age and technology. But if you read some of the comments, well, not comments, but some of the compartments that I put in that vertical line, you see how heavy it is to run a scaled mortgage bank. And the question for most mortgage companies at any sort of scale is, do you build some of these things internally and make the investments and control your own destiny? Or do you pick some of these items and leverage vendors? The answer is yes to both. But for each individual company, the variation in the ratio is uniquely different. Everyone has their own unique views of building it internally or to buy off the shelf. For the last 10 years, we started Loan Depot in 2010. The defensiveness from traditional loan officers has always been, I provide great service, technology would never replace that. I think they have it all wrong. Whoever said that was a multiple choice question? Its answer is C, all of the above. Customers want the convenience, the ease, the control they have utilizing technology. They want to be the boss in communications. But darn it, when they want good service, you better be there. And our business is local. A house is local. Touring it is local. So blending a digital solution with the right digital tools, along with local expert service, in our opinion, is the formula. I wanted to share this, not in a way of a commercial for ourselves and our number one competitor. I think Bill's on stage tomorrow at the exact same time, so make sure you boo him for me. This is interesting. Let's take a look at the refinance market. In 2011, 5 years ago, these two companies did 1 out of 30 refis. Fast forward to the first 3 months of this year, these two companies now have a massive position, 1 out of every 5. I think the question here and the brain teaser is, when does that ratio and trend stop? It went from 1 out of 30 to now 1 out of 5. Pretty interesting stat. And now let's look at the purchase market. It's lagging about 5 or 6 years behind. And it's certainly trending up also. 1 out of almost 200 in 2011, and now 1 out of every 22. So something to be said here about both of these companies becoming more complex. Why will we take on the headache of running a mortgage company and add additional products and services? Because the combined market share of these two companies, I believe, is only at 7%. Why don't we focus and increase that 7% to 10 or 15? Why would we now focus on other items? I can answer for Loan Depot, and that is, we got to listen to our customers. And they are telling us very clearly what they are looking for. So let's bring us back to 1991. I know there are some folks in this room that didn't even exist in 1991. So consider this some education for you. We think that moving forward, the model, the brand, the marketing prowess, and the companies with the right products and services to delight and keep a customer instead of just being a transactional hunter is ultimately going to win and win pretty big. Now, will that happen in 15 years? Maybe half that time? Maybe in 5 years? I think that's the interesting times that we're all in. Being in this business now for 33, going on 34 years, it's absolutely fascinating, the era that we are in. We have enough challenges with housing cycles, regulatory pressures, compliance, CFPB. For the first time in this cycle, post-Dodd-Frank, we have very little mortgage liquidity fueling products into our industry. As you know, 90% of this year's fundings is still backstopped by Fannie, Freddie, FHA, and VA. Now we have digital disruption. We have a company such as Zillow with 160 million monthly unique visitors. We have real estate companies getting into mortgages. We have tons of capital flowing into companies like Opendoor and OfferPad. We have luxury car trade-ins when you want to buy a new BMW, but we have no trade-in programs for real estate. I think that's going to be very, very interesting to watch, to see how companies changes from a service model to more of a balance sheet model. So I want to thank you for giving me the opportunity this morning. I hope I set the right tone for this mortgage conference. Thank you very much for having me. Have a great conference.